What do Warren Buffett, Charlie Munger, and Benjamin Graham have in common? Besides being household names in the investing world, they're also some of the most successful investors of all time. Interestingly, while investing has proven to be a lucrative endeavour for some, the same cannot be said for many others. In fact, investing can be quite daunting for beginner investors. So, what sets successful investors apart from others? How do they navigate the investment landscape with ease? Well, the answer lies in the specific habits and strategies they employ consistently in their investment decisions. By following their lead, you too can learn to make informed decisions, avoid common mistakes, grow your wealth, and ultimately achieve your financial goals. Here are 4 key habits that have helped the most successful investors create wealth consistently over the years. 1. They write a plan and stick to it. Research has consistently shown that individuals who take the time to create a financial plan are more likely to achieve their financial goals compared to those who don't. One of the most critical habits of successful investors is that they have a plan. They take the time to set investment goals, determine their risk tolerance, and create an investment plan that aligns with their objectives. They understand that investing without a plan is like driving without a destination. You'll end up lost, wasting time and money. Successful investors don't just create a plan, they stick to it. They are disciplined and patient, and they avoid making impulsive decisions that can derail their investment plan. So take the time to create a plan that works for you and stick to it. 2. They do their due diligence. Successful investors know that investing is not a guessing game. They do their research, analyze financial statements, and make informed decisions. They don't invest in something they don't understand, and they are not swayed by market hype or fear. Due diligence involves analyzing a company's financials, its industry, and its competitors. It also includes assessing the management team and the company's growth prospects. Doing your due diligence can help you identify companies that are undervalued and have a high potential for growth. Therefore, before investing your hard-earned money, make sure you have done your research and you're confident in your investment decisions. 3. They invest for the long term. Successful investors understand that investing is a long-term game. They know that short-term price fluctuations are difficult to predict and can be influenced by a variety of factors. Therefore, they invest in solid companies and hold for the long term. Investing for the long term allows you to ride out short-term volatility and benefit from compounding. Compounding is the process of earning interest on interest, and it is one of the most powerful wealth-building tools available. The longer you hold your investments, the more they can compound and grow. Investing for the long term can also be more tax efficient because long-term capital gains tax rates are typically lower than short-term rates. 4. They have their emotions in check. Successful investors don't let their emotions guide their investment decisions. They make rational decisions based on their research and analysis. They don't panic when the market is down, and they don't get overly excited when the market is up. Emotions can be a powerful force in investing, and they can lead to impulsive decisions that can hurt your portfolio. For example, many investors panic during market downturns and sell their investments at a loss, only to miss out on the subsequent rebound. Therefore, it's important to keep your emotions in check and stick to your investment plan, even during turbulent times. Investing can be a rewarding way to build wealth, but it requires discipline, patience, and a solid plan. Successful investors have cultivated habits that allow them to navigate the investment landscape with ease, and you can too. Some of the key habits of the smartest investors are: 1. They write a plan and stick to it. 2. They do their due diligence. 3. They invest for the long term. 4. They have their emotions in check. Like they say, success leaves clues. If you want to boost your chances of success as an investor, follow the lead of the most successful investors by adopting their habits and techniques. Hope you found this video helpful. Don't forget to like it and subscribe to the channel for more. Thanks for watching. I'll see you in the next video.